Good morning, America. Hubert Johnson here, back again for another great week talking about taxes made easy. So, we're going to pivot a little bit and talk about another kind of uh, government debt that is plaguing a lot of businesses. So, we're going to focus on this is going to be kind of a business heavy chat today where we're talking about SBA loans. So, everybody knows about post COVID. The government was giving out money like crazy, PPP loans, EIDL loans, and we're going to focus specifically on the EIDL, Economic Injury Disaster Loan. What is it? How does it differ pre-COVID versus post-COVID, and what to do if your business isn't making it, if it's just too much, you just owe too much on it, and how to best address that. So again, we'll be back in just a second, and thank you for watching live or on rebroadcast. We'll be back shortly. Welcome back, everybody. Hubert Johnson here with Taxes Made Easy. Again, pivoting a little bit today, we're going to focus on something that affects many businesses today, SBA loans. So SBA loans have been around since the 50s. So this is the government helping out businesses, encouraging economic growth by offering loans at fairly good rates. Prior to COVID, you could get an SBA loan, but you had to use collateral. So you had to have a house, you had to have something to put up as collateral, and they would place a lien on it. So if the loan went bad, the government had some way to recoup their interest. It wasn't just free money thrown to the wind. Post-COVID, as we all know, the government threw money to the wind. Again, they just threw money out there as quickly as possible. People grabbed COVID loans. There was a lot of fraud in it. There was a lot of misuse of funds. So, and the government is trying to crack down on that, but their biggest issue now is the ERC fraud. So that's a whole nother ball of wax, and we're not going to touch that. But again, if you didn't use those funds for the best reasons, you need to take that into account when resolving your SBA loans. So we're going to talk about what do you do if your business is in trouble now, or now that the loans, a lot of people are having issues now that they need to start paying on those loans, and they don't have the most income, they don't have their business isn't thriving. Now, I took an SBA loan because the rates are amazing, and it really helped my business get back on its feet. Post-COVID, the government shut down and just completely shut us down. So there are plenty of people that took it, put it to good use, and are paying on these loans. But with all the chaos in the economy, a lot of people aren't. They're not able to. The real estate market has changed. So much has changed, and when you have a lot of upheaval and chaos in the economy, it affects businesses. Businesses need stability. They need to be able to accurately predict what's going to happen moving forward, so people can say, hey, this is a good opportunity, let me invest in here. But when things flip on their head, it causes a lot of businesses to fail. And so that's what we're facing now, is that a lot of these businesses are either failing, or now they have to start making those payments, and they just can't afford it. I've seen people making $2,000, $3,000 a month payments, and they can't even pay themselves. There's no way to handle this loan and run their business. It's just too much. So, in particular, we're going to focus on EIDL loans, and I've got to start off with some really good news. First of all, if you took out less than $200,000, and when I say this is free money, where the government just threw money to the wind, this is going to explain it. This is going to blow most people's minds. If you took out less than $200,000 in SBA loans, you did not have to give a personal guarantee. So the only guarantee that these loans would be paid was by the company. If the company fails, the government has no recourse, no way to go collect this money, and you walk away. You don't need to file bankruptcy. You don't need anything to do else. You don't need to do anything else. All you have to do is close out your business properly, let the government know, you can close out with the Secretary of State. That's it. That money just becomes unenforceable. If you took out more than 200,000, that's where it gets tricky, because then you gave a personal guarantee. So if you took out more than 200,000, unless the IRS messed up or the SBA messed up, you were required to give a personal guarantee, which means if the business fails, they will come after you personally for the tax debt. So what are your options? And that's really what we're going to talk about here. How do you handle this situation? So if first of all, the first option is to keep the loan with the SBA. If you go in, you're in this situation, you have a business, you have this large debt, and again, the terms of these SBA loans are amazing. 30 years, really low percentage rate. I don't think I'm ever going to pay mine off early. Why? And I'm making the regular payments. I'm doing everything that I should. But the interest rate on it is less than inflation right now. About 5 points less than inflation. Why would I pay it off early? There's no reason to. So by going ahead and just dealing with it, if you can keep these loans active, if you can stay on top of them and get caught up, that's what I recommend a lot of times. Look, if you can do it, but you're just not sure if you want to, trust me, there's no easy way out of these loans as long as your business stays open. It's best to pay it off if you can afford to do so. Just make the payments, just stick with it. Now, if you go through a rough patch, the SBA does not want these loans to default, but you have to communicate with them. So you can either do that through a representative or you can do that directly. So if you go through a rough patch, you can call them, or it can be negotiated with the SBA to lower your payments to 10% of their original balance. So if you're paying $700 a month, you can get your payments dropped to around $70 a month for about a 3 to 6 month period. And you can renew that a couple times. So there is a short hardship period where your payments can be reduced drastically, but then they're going to want the payments to go back. And that's not forgiven money. That just extends your loan a little. But again, they will try to work with you to make these loans default. So if you have the ability to pay, and you have the assets or the assets to pay the balance, it often makes more sense to keep the loan with the SBA. Use these programs, use these opportunities that they have to buy you some time, give you some breathing room, but keep the loan intact. So the number one, if your business is still open and you can afford to pay the balance, keep it open. Stay current on the loan. Don't let it default. So when it defaults, so if you can't make the payments, you've missed the window on these hardship windows for you where they reduce it down to 10% of the total payment for a while. And that's why if you're having issues, call, find out what your rights are early. Don't wait. Do not wait. If you're struggling, get some good advice early, because you want to take advantage of these. Most people want to keep their businesses open. Unfortunately, sometimes the writing's on the wall, and you've got to know what your numbers look like. You've got to have a good profit and loss, good bookkeeper. Same as for your taxes. You got to know what's going on so you can make good decisions. If your business truly is losing money or can't operate, I've had profitable businesses where there's just the loan amount is too high. I had, this is a true story. One gentleman had a solar installing business. He was killing it. He was doing great, and he was mainly in California, but he was branching off into other states, and he was making plenty of money. Till California changed their reimbursements for solar. So California, due to their budget crisis, decided to cut their solar way back. So, that's not something most people would have foreseen. Who would have thought that California would reduce the benefits of solar? And it hurt all of the solar companies in California statewide. And that was the majority of his business. Pretty much killed his business in California. Now, he still had income from his business in other states, but it was one business, one SBA loan. So he was still running his business and making a profit. But his business in the other states could not afford the SBA loan with the loss of all of his California business. So now he's in a pickle. He wants to keep the business open, but he can't afford everything going on. So when you have these situations, call us. We can work it out. We will do our best to work with the SBA. And if it defaults, you still have options. Then it goes to the Bureau of Fiscal Services, or BFS. Now, none of these are run by the IRS. So these are separate organizations within the government. And it's key to understand how they operate and what are their concerns. So the main concern here is, you don't have ongoing tax filing issues or anything like that, but they want to get the government paid. This is not a freebie walk in the park. They already know that if you don't have a personal loan, most people are just walking away from these loans like crazy. Now, one caveat. I had someone call in, true story again, and he took out the money and didn't use it for a business. He said he was going to on his application. And he invested it in Bitcoin, Ethereum, and all that. He invested it in virtual currency. And like most people between around 21 and 22, lost his shirt, lost the money. He didn't build the business. He invested it rather than he didn't use it for the purpose it was intended to. That's called fraud. If you are in that boat, pay the loan. Especially if you have a personal guarantee on it, pay the loan. You do not want anybody looking at your case. Pay the money back. Use the SBA terms that are very generous. If you hit a rough patch, try to work with them, but make sure you don't let that loan default. If you let that loan default and it goes to the BFS, this is where someone's going to look fairly closely at your case. I would never, ever encourage someone to commit fraud. But if you did, pay it. Just pay the money back, and you probably won't get investigated. If you let it default, that's going to be a problem. So if questions about it, you use most of it for the business, or I used half of it for the business and took the other half and invested it, bought lottery tickets, whatever you did. Pay the money back. You don't want them investigating your case. Stay with the SBA as much as possible. And that's to protect you and your family. People make mistakes. People do dumb things all the time. The last thing you want is a fraud investigation. The IRS is taking these very seriously. And their white collar crimes division is actively investigating cases just like this. So the SBA was and has been the hottest thing that they've been investigating. Now it's ERC loans, but they are absolutely still investigating SBA loan fraud, especially as now. This is when a lot of loans are defaulting. A lot of people are losing their money. And I went way over time. Welcome back, everybody. I got a little too carried away before the last break, and I kept talking. So just to cover what I was talking, just sum it up of what I was saying. If you have any issues, you don't want anybody looking too closely at your SBA loan. The IRS is white collar division and the federal government white collar crimes division is actively investigating these kinds of cases where people took SBA money and used it improperly. So the representative would be used for business, and then they used some or all of the funds for other uses and lost the money. So again, if you are in that situation, pay the balance, pay it over time. Do your best to keep it with the SBA. You don't want them investigating it. If it goes to the BFS, it will be looked at on a case-by-case basis. Now, Bureau of Fiscal Service is where these cases go when they default from the SBA. Now, the BFS, if you thought the IRS was hard to get a hold of, the BFS is even worse. So we do work with them. They're a pain to work with. You have to follow up on them. You have to hound them. You have to stay on top of them. But again, their cases are taking twice as long as the IRS cases. So again, they have their main lines. You just have to hound them to get through. And now they've been sending cases to outside collections. Now, IRS and the states have been using outside collections for quite some time, but usually all they can do is set up an installment agreement. If you want a hardship status, or if you want to do an offer in compromise, they have to send the case back to the IRS. Interestingly enough, the way the BFS is handling these cases, mainly because they're so overwhelmed, they're referring these out to outside collection agencies, and you can still do partial payment agreement or an offer in compromise. Now, the BFS really doesn't have a hardship program for SBA loan defaults. Either you qualify for the offer or you need to get on some kind of payment plan. So this is what we're looking at. And so with two main categories here. And the options are different depending on whether or not your business is open or closed. So the business that obtained the debt, is this business open still or is it closed? So if it's still open, you really are only going to get some type of payment plan. And even then, they're going to want the full amount paid within a certain amount of time. It's not going to be 30 years like with the SBA. It's going to be 7 to 10 years. So that the period to pay is a lot shorter. The interest rate is higher. You don't have this guaranteed really low fixed interest rate that you did with the SBA. So, and it's based on the current market condition. It's going to be a little bit lower. I've seen 5% recently. But still, it's not going to be as good as the loan that you had with the SBA. So this is why I say if you're going to keep your business open, try to keep it with the SBA. Don't let it default and then go to the BFS. Because if it does, you're going to have a much worse installment agreement. You're going to have shorter terms, higher payments, higher interest rate. Now, it is possible to have a case sent from the BFS back to the SBA. We've been able to get that done, and then you get back on the SBA terms, but you have to get current on the loan. You have to. It's not a guarantee. So again, if you want to keep your business open and you can in any way afford it, keep it with the SBA. So again, if it's an open business, you have to negotiate some kind of installment agreement. Now, if the business is closed or is closing, then you have the option of an offer and compromise. But I still want to stay on this installment agreement first. So let's say the business is closed. You have two options. You can keep it open with you can still pay the debt and service the debt even though the business is closed. If there's no personal guarantee, that's up to you. You can walk away, business is closed, and they can't do anything. If it's over $200,000 and you have a personal guarantee, then they will come after you and your personal assets. That's the whole point of a personal guarantee. So if it default, you can still pay with the SBA. Again, better terms, etc. But if it goes to the BFS, then you can go and do what's called a partial pay installment agreement. So let's say the original loan, the with the SBA, the monthly payments were $2,000 a month. You're like, I can't afford that. My business just shut down. I was a realtor, et cetera, and the real estate market is in the toilet now. What do I do? Well, you can go to the IRS, or no, sorry, you can let default, go to the BFS, and if your finances show you can only pay $500 a month, that's what you end up paying. Will you ever pay off the full balance? No. But you can get on this partial pay installment agreement and stay on that. So if we're staying with the realm of the business is closed, and your other option is to do their offer and compromise program. So they will levy, they will issue tax liens, they will come after wages, bank accounts, et cetera, just like the IRS. And so that's why this work is very similar. But again, it's much harder to release bank levies, much harder to release wage garnishments because they're not fully staffed. They don't have great customer support. Remember this, they are worse than the IRS, and that means a lot. So we'll call in, and it could be months before even looks at paperwork that we've submitted. We have cases most cases are lasting a year or two because it takes them that long to actually get someone assigned and actually work the case. And we do not have direct communication with the people working the case. So it's much, much harder, longer, more involved working with the BFS. So you can do a partial pay installment agreement. You can pay it in full. And on a partial pay, again, you could be paying much less. If you can only afford a couple $100, that's it. If you have assets, they're going to want your assets. And again, they follow different rules than the IRS. And here's the funny part of it. So you kind of have the IRS framework for this, but keep this in mind. This is a fairly new thing. The BFS has been around to collect for SBA loans, and it used to be that pre-COVID, we have some pre-COVID loans that we're dealing with. It was just, you always had collateral. So the government would usually get paid. And so, again, that would be worked out, whatever, to liquidate the collateral or whatever happened to it. And they would figure it out. And again, it was very specific on a case by case. Now the numbers of cases have exploded post-COVID. They're overwhelmed, and they do not have solid rules for their offer and compromise program because they never needed it before. It was a very rare thing. So when you're going in there, getting the answers from a program that doesn't have well-defined rules, it's like working with the states. It's you do your best, you present the information, the numbers, you argue through it. But again, they're not. The nice thing about it is that they're not following all the strict changes that the IRS has made under the current administration. So you do have some leeway there if you show you can't access assets like real estate. The problem is it's taking much longer for them to consider an offer and compromise. And the paperwork is really different. So again, they go through and use a completely different, a very different analysis, not completely different, but you have to walk through these expenses carefully. You have to make sure the form that is filled out correctly, and getting that advice to do so is much more difficult to do because this is a much more difficult program to communicate with. We've had questions and we've reached fairly deep into the IRS bureaucracy, into supervisors, and they didn't know. And getting an answer from the BFS is like pulling teeth. So again, if you are leading on the offer and compromise program, remember the business has to be closed. The assets, if you have personal assets that are liquid, it's going to be a problem. If you're now retired, you can rely on a retirement account. You can protect that asset. But in most cases, It's the rules are a lot less defined as you go through this. So you prepare the paperwork. You need to submit everything together. You don't have that like an offer and compromise. You're always in communication with the offer unit because you can always get through to somebody. You can't usually get through to anybody at the BFS. I will try for weeks to get through. And again, I'll call Thursday, Friday in the morning, best time to call. And there'll be plenty of times that their phones are busy. So I have to try sometimes in the afternoon. I have to scattershot and just say, hey, when can I get through? And I usually try first thing in the morning, later in the week. But I've had Friday mornings where I couldn't get through at all. And expect to be on hold 30 minutes to an hour to longer with the BFS. That's typical. So again, that's some of the problems and difficulties working with the BFS. If it gets sent to a collection agency, they're much more efficient. We have one offer with the collection agency that we're moving forward, and it's much better because you call a collection agency, they answer right up. When we're working with IRS or state cases, we don't like working with collection agencies because they just want the money. That's what they're all about, is pay us the money, pay us now. And especially with the states, they can be very aggressive and brutal. And you don't have all the rights that you do with the IRS. So that's why we typically, especially with the IRS, will just ask those cases be sent right back to the IRS. With the BFS, they're better to work with. And so they're more responsive. You can talk to somebody. So as far as the BFS compromise program, offer and compromise program, you put together all the documents, you submit it, and then you have to follow up. You have to follow up and you have to submit a reasonable offer based on your ability to pay. Now, with the IRS, we can get away with doing a $20 offer because they have well-defined rules, well-defined analysis. It's not so much with the BFS. So again, they want their pound of flesh, so to speak, similar to New York, where you submit an offer, you make a reasonable offer based on any personal assets you have and any business assets. Because when they're doing an offer and compromise, they're looking at both. So if you lost your business and you just don't have anything, but again, you can beg, borrow, come up with something to pay a small portion of it, maybe 5,000 to 10,000. You can submit for an offer and compromise. If you do a $20 offer, they're going to look at you and say, why would we accept this? It doesn't make any sense. But they've got to give them something. Now, any questions about the BFS? I'm not getting very detailed with them because, again, this is a fairly new practice area. A lot of people, us included, have really taken a deep dive into this post-COVID because now there's really high numbers. There's really high demand for it. And a lot of the BFS hasn't had to flesh out rules yet. So the more cases they get, the more they're going to have to define this. But again, this is a one-time thing. So all the post-COVID thing didn't really, you can't go to the BFS or the SBA and get the same post-COVID loans unless Congress makes more money available, which I don't think they're going to do again. Who knows? The next crisis, they might open the floodgates again and do it again. Who knows what they're going to do? But again, financially, it's been a disaster for the U.S. government. There's one big caveat here. You go in, and let's say you get an offer and compromise with the BFS. This was a big deal during the 2008 mortgage crisis, where people were defaulting on loans, doing short sales. The value of real property dropped like crazy. When people did short sales, so if you ever do a short sale, be very aware of this. So if you owe $400,000 on your home and you sell it for $300,000, the only way the bank can write off that $100,000 if they have to write it off as a canceled debt. And then to do so, they have to issue a 1099-C to the person who owned the property. So your property was sold for $300,000. That's the asset. The bank has no recourse to go after you personally, so there's $100,000 in debt that the bank writes off. When the bank writes that off, you get this 1099-C as if it was income. And that adds $100,000 to your tax return of income. And you get taxed accordingly on that. It's called a cancellation of debt. So IRS, again, people used to use these as tax shelters. They used to play around with this all the time. So the IRS came up with these rules and said, look, people are abusing this, so we're going to make them pay when they try to do this. So this is why, it's not used as a tax shelter anymore, because it's got these teeth. When you have a BFS, offer and compromise, on SBA loan debt, they will issue a 1099-C. So even if you wipe out this debt and settle it for much less than the total amount owed, be aware. Let's say if you settle $200,000 for $20,000 or $300,000 for $20,000, that $280,000 that you settled and didn't pay will count as income to you on your next tax return. And then you get to deal with the IRS and go through the same program. So again, then you very well might have to either do an installment agreement with the IRS or an offer of compromise with the IRS, but be very aware of that. Know that this problem is coming down the road. Now, if you qualify for an offer with the BFS, it's very possible you qualify for an offer with the IRS, but you have to anticipate that, know that that's going to be a problem down the road, and be ready to deal with it. So again, for every 100,000 that you get forgiven, you probably get roughly around 30,000 in taxes for that. And you just have to be aware with it and deal with it directly head on with the IRS. So we've talked a lot about SBA loan debt and the different options. And I'm gonna delve into some outliers when we come back in this last little portion, and then touch on the next topic for the next day. So again, if you have any questions, give us a call, 520-485-7371, guardiantaxlaw.com. If you haven't defaulted, if you have defaulted, find out what your rights and options are, because in this case, it absolutely makes sense. If your business is open and you can afford to make the payment somehow, keep that SBA loan active. If the business is not paying for itself, it's closed out, and you're ready to move on, consider the options, because they are not pretty with the BFS. They are very hard to work with. And again, we have helped a lot of people out here, and again, very pleased with ourselves that we've been able to keep some businesses open. But again, we're going to wrap this up in the next little session. And the number one key is, when you have questions, call. You have problems or concerns, get answers before you step in a bear trap and make things worse, which it can absolutely happen here with SBA debt. Again, Hubert Johnson here on Smart Money Culture TV, and we'll be right back. Hubert Johnson here. Thank you for watching, everybody. And just kind of wrapping up SBA loans. There are some wrinkles to be aware of and to be concerned about when you're dealing with SBA loans and whether or not to let them default, etc. If you have investors, if you have partners, anybody else that could be held personally liable for this, you have to be very careful, or you're going to burn your partners. If you are a partner and you were part of this personal guarantee, you were a co-signer, you did a favor for a buddy, be very careful. So right now we have cases where someone was a partner, they co-signed, they were helping out a friend, helped them get this loan. and now they're on the hook. So when it comes to co-signers or multiple partners, multiple people that gave personal guarantees, if you keep it under the business and the business pays for it, it all is resolved by the business. You don't have to worry about them going after you personally. However, when the business shuts down, the case that we're working to resolve right now, this is exactly the case. The original owner, person that was running the business, he's judgment proof. He doesn't have any assets. Can't really address this. So the government is going after his investor, who was also the co-signer, who has assets, because they would not have given the loan without the co-signer, because the original guy, his credit was bad. So now the co-signer is on the hook for the whole thing. And they're looking at his assets, his income, and yes, he's going to have to pay a large down payment and then probably get on a payment plan for the rest. So he's trying to work out some kind of payment plan that works. And they don't care that he didn't run the company. They don't care that he didn't make the decision to close the business. If your name is on there as a personal guarantee, as a partner, or you have a friend on there as a partner or as a co-signer, anybody that gave a personal guarantee, their personal finances are subject to the same kind of investigation and collection actions. And the SBA will move on those. When these default, this is something that they're actively working on to go after this money, because so much money has been lost through this program. They're trying to recoup what they can. So again, this is why it's important to get out there, get in front of this. Like I said, if they hit you with the bank levy, wage garnishment, good luck getting reversed. You can. It's very difficult. Again, they're very difficult to get a hold of. They're not responsive. They take months and months to look at the same piece of paperwork or set of documents. So we've sent them in, all in, and we've got a response. Hey, we need X, Y, and Z. I'm like, we already sent them in. Here they are again, but you got them back on this. Here's the certified, tracking the number to show that we sent it certified and that you received it. And so this is the game that we're playing. But again, watch out and be very aware for those involved. If it's a husband and wife, again, your partner and all of her assets are going to be subject to the same collection actions and any community property assets. So if you're living in a community property state and it's a husband-wife situation, again, they'll go after everything they can. So be aware of what your rights are. Again, find out early. Keep it with the SBA if you can, if you're going to keep the business open. If you have to close it out, they do have a functional offer and compromise program, and they are accepting offers. So if you need that, you can use it, but be very aware if you have partners or anybody else involved in it, they could get burned while you walk away scot-free. And that's a great way to burn bridges and cause problems down the road. So just be aware of that and know overall, how this is going to affect you. So in that other case we're helping the partner, and it was the owner that came to us first. He's like, hey, I don't want to burn this guy. I'm like, well, kind of did. And he didn't have any assets. He had no way to pay. So he walked away while because he was judgment proof while the partner's dealing with this whole mess. When you get those notices, give us a call. If you know you're struggling to pay the SBA loan, call. I've had people call. We gave them some free advice. They're like, oh, well, best thing is to stay on the SBA loan. I'm like, yeah, absolutely. We can represent you to use some of these hardship programs to buy you a little bit of time, get you some breathing room. But if you can, keep that SBA loan. Again, the initial terms were a gift. The interest rates were still low then. When they open up all these programs up, many people have 3-4% interest rates, 30-year loans. It's better than most people's mortgage. So the terms of these loans were amazing. If you can stay on those or get back on those if they have defaulted, that's exactly what you want to do if the business is still open and you can afford to make the payments. So if you have any other further questions, give us a call. or reach out to us through our website, guardiantaxlaw.com. And so we're going to pivot here and kind of introduce topic for tomorrow. So this is another fun topic, and again, it's more targeting people with assets. So if you have what are called foreign assets, this is what we're going to talk about. A lot of business owners, a lot of people that have traveled, and this is going to probably pretty much take up most, if not all, of tomorrow's session. But if you have any overseas assets worth $10,000 or more, in particular, any kind of bank accounts, retirement accounts, any kind of cash assets, and the IRS wants you to report it. So this is just a reporting requirement. Why the big deal? So this law has been on the books since the 70s, but the IRS had no way to enforce it. So this is called FBAR, FinCEN reporting. If you talk to your CPA or a tax preparer, it should be on their checklist. If when you go in and fill out your taxes every year, if there's not a box or a question, do you have any foreign bank accounts? If so, what is the amount? You might want to get a second opinion. So again, we have people that said, no, for years. And then they find out, oops, I actually do have something. Well, I didn't think it was that much. And then you look into it, it's like, oops, it's higher than I thought it was. It happens. There's plenty of people that don't know. They didn't know that they had this reporting requirement. And there's plenty of citizens, American citizens, that didn't know. So if you have any foreign accounts, you absolutely want to listen to tomorrow. If you have more than 10,000 aggregate, which means you take all the foreign accounts and you add them together. Recently had a gentleman who had some accounts in Canada. He's like, it's just some small accounts. I'm not worried about them. There's not that much in them. There were about 2,000 to 3,000 in each account. He had 4 accounts. Yeah, it's the aggregate. It's the highest point for that. So yes, he was in violation of this filing requirement. So just a little bit of the history. You go back to the 70s, and this was really used to target crime. So money laundering, people passing accounts through foreign accounts. So when they found these accounts and they found these money laundering operations, the United States didn't really have a way to, it wasn't a crime. There was no way to go after these assets. So they passed this law. So when they did find these through their investigations, they could do something about it to try to shut down or go after these money laundering cases. Today, with the advent of the internet and international treaties, the United States economy, and this is consistent, Democrat, Republican, it doesn't matter. They have been using this full force because it's been a huge moneymaker for the IRS, a huge moneymaker for the U.S. government. They're not just using it against criminal enterprises now. They're using it against everyday average citizens. So the requirement has always been on the books that you just have to report these. If you report them, no problem. You just tell the U.S. government, hey, I have these foreign assets. It's, unless it's income, if it's foreign income, you need to report it as income on your tax return. But if you just have assets, there's no tax on them. There's nothing to be paid. It doesn't change your tax return, but they just want it reported. So over the years, the U.S. has used its economic weight to pressure other countries to release all their banking information. So now the government knows if you have Swiss accounts, and it used to be back in all the spy movies or spy shows, people had Swiss accounts or accounts in the Cayman Islands or throughout the Caribbean. Those days are long gone. All of that's reported now to the federal government. And so they have that information. Russia, believe it or not, has signed a treaty with the US government where that's all being reported. There are many, many countries that have these agreements. Most of the largest countries do. China is one of the few that hasn't, but it's still, if they open up and they get all that information, it's going to be a huge problem. So, true story, I had a gentleman, he was Russian, and he had emigrated to the United States. So he was living in New York City, and he had gone somewhere else. And they had he had plenty of family back in Russia, and they had access to his bank accounts. Bad idea. And someone had passed away, so there's an inheritance of over $100,000. They put it in his account for 1 week, and then moved the money out and distributed the funds to whoever they were going to distribute it to. But because it showed up in his account for 1 week, all of a sudden he had this FBAR issue. He had to report it, and he didn't even know about it. So if he just reported it, money was there, that it was gone, whatever. All he had to do was report it. There was 100,000 plus on my account. Here's an extra sheet, and he would have been fine. It was more complicated back then, where you had to do an electronic filing and report on it. It was crazy. They made it a lot easier in the years since, thank goodness. It's just reported with your tax return. It's just an additional form. So pretty straightforward. Now, he had gone to another firm and they had had him pay 20%. So over $20,000 on this. Because that was the easy way to go. And I said, hold the phone. Given your situation, he had a great reason here. I mean, they were lazy. They just charged him, did the easy voluntary reporting, which doesn't exist anymore. I said, look, I can drop that down to 5% at worst, but they have a program where you can go in and say, hey, there's the situation, extraordinary circumstances. And we were able to get the entire $20,000 back that he had already paid in because of the unique facts of his such situation. So if you are in this situation where you have foreign assets, get good advice. Again, I can't repeat that enough. Talk to your CPA, and most CPAs don't handle this. So if you can always give us a call at Guardian Tax Law. You can look up FBAR reporting or FinCEN reporting. So that's FINCEN reporting. And you can get some information and start learning about your responsibilities here. Now, if the government finds you, this is the scary part. I usually don't use fear tactics to scare people into calling. This is going to be scary. If you do not report, and the government finds these assets first through their investigations, once they find you, the minimum fee is 50% of the asset and criminal investigations. So people go to jail over this. It's very rare. Usually the IRS just wants their money, but sometimes they make an example out of somebody like Paul Manafort. And so there's others there where it was more high profile. It was a public figure, etc. And so the IRS actually sent them to jail. The last thing you want is for the IRS to find these issues, because once they start investigations, they've got their hooks in you. It's pretty easy to prosecute. The financial records are all disclosed to the IRS. Most countries are disclosing all of these records. So it's absolutely something you want to be forthright about. You want to get this. You want to get straight with them. So tomorrow we're going to really dive into how to get straight with them, how to report this information, and how to make sure that this isn't going to be a problem that's going to cause some massive issues for you and your family or your financial situation. So again, want to thank you for listening to Taxes Made Easy. We covered a lot of SBA issues, SBA loan defaults that we kind of introduced, FBAR and FinCEN issues, which we're going to really dive into tomorrow. Again, if you have questions, give us a call, 520-485-7371, or reach out to us through our website at guardiantaxlaw.com. Hubert Johnson here on smartmoneyculture.tv.